Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review the stock and forex commodity markets. So without any further delay, let's go ahead and review all these key charts and data. Alright, for starters, the stock market and the dollar index have been operating in a very inverse manner. The Euro-US dollar has continued going lower, and the Dow Jones Industrial Average has continued its downward trend. The whole correlation here is this: the Euro-US dollar goes down, the stock market goes down with it, the dollar index goes up, therefore the stock markets head lower. Now, if you want to get some key areas of support, the dollar index did bounce off this gap window area. It heads higher off of that, and it is jumping into the 20-50-day moving average area. I don't think it'll be too much trouble. I do anticipate some strength going into it, and I do anticipate a pop above it. Main reason is that this Euro-US dollar is having a precipitous decline. Every single time you have a major decline like this off of a major bounce up, it usually has an easier time breaking below the 20 and the 50-day moving average, especially when the bounce is weak and the trend is relatively strong. So my whole thought process on this is very, very negative. I anticipate the euro to weaken even further. Moving on that point, I do anticipate the Dow Jones Industrial Average to fall lower and head around the 11,600 area. This 11,600 area is based off a multi-area of support, mainly through 2009 and June support area, 2010 July and June, which is basically the May flash crash lows, and on top of that, then 2009 March lows. And connect these lines together, and you basically get 11,600. Now, mirror that onto the S&P 500 index, and that's basically 1,240. And if you want to mirror that onto the SPY, that's basically 125. So, you guys know all the key levels to be watching. If you guys are watching the Dow Jones Industrial Average, 11,600. S&P 500 cash for you futures traders out there would be around 1,240. If you're an SPY trader that trades call or put options or spreads, the area you want to look for is around 125. 125 to around 126 would be your target zone to be buying this market for a short-term relief rally or a major bounce off of the market bottom. Moving on, I do anticipate bond markets to have a continued upwards trend, at least throughout June, as the Federal Reserve's Treasury bond market, the Treasury bond buying program will continue as market fear does accelerate. And to top that all off, I do anticipate a continued downward trend in the crude oil market, based on currency factors and the fact that the economy is slowing down overall. The overall trend in crude oil will definitely have to be negative. As far as key technicals are concerned with the Euro-US dollar, if it does break down, I do see us breaking way below the 1.4 area into the 1.38 area, and after that we will test the 1.35 zone. So again, this will be your basic areas, 1.38 to around 1.35. Look for support around these areas. Another thing I do want you guys to keep an eye out for on the dollar index is a much longer term rally, a little more sustainable this time. I don't think the 20 and 50-day moving average should be too much trouble, as you are making another leg up into another bounce. Remember, we are still up on a multi-month upwards trend. If I want to go ahead and pull up a chart, I will show you guys a monthly chart. And if you guys are looking at a monthly chart, we are making some really, really solid gains here. This month chart and this month chart are continuing this upwards trend. Remember, each month, as long as each month continues to be positive, this market should continue to head lower, at least the stock market. So be very aware of that. I do think the second half of 2011 will be relatively weak and not that strong. So yeah, and I want to also point out another chart pattern, which would have to be on the monthly chart. And again, I'm just going to go ahead and show you guys a quick pattern. And again, if you guys look back here, if this area of support can't hold, this could lead into a major drop on the indexes. And that's because the economic picture has changed and the Federal Reserve might not release quantitative easing 3 as soon as everyone is predicting, but that also doesn't change the fact that the economic picture has eroded as quantitative easing isn't coming into play, unemployment is continuing to go higher, and the economic condition hasn't really improved by much. Along with that, the Chinese economy is slowing down its growth pattern. So again, there isn't too much to be so optimistic for. If you guys want a longer-term macro viewpoint, this is basically it. This is really, really bad, and I just don't see markets finding too much traction until we reach this area of support. It could have a major bounce off of this area before it ends up heading lower. But if it doesn't head lower, that must mean that the economy has improved. If the economy doesn't improve and we continue to consolidate above this level, we will eventually break it and we will head much lower on the S&P 500. My guess is we retest the May flash crash lows at the very least. If, and that's only if, the economic condition worsens and we break below this trend line, okay? Well, that does it for me for today. This is just my market forecast as far as the stock market, crude oil, and bonds with Forex is concerned. Thanks a bunch, guys. If you are interested in these videos, please be sure to go ahead and subscribe to my channel by clicking on the link right below in my YouTube profile channel. And if you guys want to check out the charting software I have, check out the link right below this video. If you guys are interested, be sure to go ahead and add me on Facebook. And if you want to find out where I am on Facebook, just message me on YouTube. Thanks a bunch, guys, and I'll see you all next time.